let's say you've made, 150% on your Nvidia, right? Or you've made 300% on your Nvidia position. It is now 2 clicks for you to get a Bitcoin allocation. As I've been saying for years, right? As I've been saying for months rather, not years. It's been made so easy to get a Bitcoin allocation now. You just click sell on Nvidia and click buy on IBIT or FBTC or one of the other great Bitcoin ETFs, and you have an allocation. That's how easy it is, right? So if you're sitting there going, hey, I've made 200% on this position, maybe I'd diversify some of it. Oh, what should I put it into? Let me put it into Bitcoin. It seems I keep hearing about this thing all of a sudden, right? It's almost like magic, almost like magic. I just keep hearing about it. It's like, I look this way, it's Bitcoin. I look that way, it's Bitcoin. I look up, it's Bitcoin. I look down, it's Bitcoin. Everything's Bitcoin. I wonder what's going on. Maybe I'll just get an allocation. All of that marketing is orchestrated to drive people into an asset. And the reason is very simple, right? The ETFs make money on the AUM of the asset. So, if they've got a $20 billion fund, then they're going to make a certain basis point on that $20 billion. That $20 billion go to $40 billion, they're going to make that same basis points on the $40 billion. Come on, guys. This is a self-fulfilling prophecy at this point, because it is the best asset humanity has ever seen in terms of its scarcity model. They are coming, and now they are here. So if you're sitting there on the sidelines going, hey, I've got some real estate, I've got some equities, I've got some this, that, and the other, do I need to get my allocation into Bitcoin? Time is, literally now running out. Like I was saying, okay, cool. The clock is going to get turned on once these ETFs happen. ETFs have happened. Now you got Morgan Stanley with a $187 million position for their clients before they started selling it. So I'm kind of curious what the next one's going to be. And by the way, that's already a 0.01% allocation of their AUM. That's it. Right? And they got to get to a 3, 4, 5, 6% allocation of their $1.5 trillion under management that they have. So there's a lot of buying coming here, and this price is going to run away. And there's a reason why every dip that's happened, by the way, a lot of people are saying, oh, but the price isn't going anywhere. The price wasn't meant to make a new all-time high. Right? I was surprised, everyone that I know was surprised that the price actually made a new all-time high in dollar terms. Obviously, as I've said, the real all-time high is the inflation-adjusted all-time high. But in dollar terms, it's made a new all-time high, which it wasn't supposed to do this early, right? That's supposed to be for next year. So, the fact that it's done that, the fact that every dip gets bought up, now you know who's buying. And I've been saying this for a while. The new buyers that are coming into this space are never, ever going to sell their Bitcoin. And if you're sitting there going, I'm sure there'll be an opportunity in the future. Maybe it'll make sense at 150,000. Maybe it'll make sense at 200,000. You're going to get absolutely wrecked because these boys are coming in with, hundreds of millions of dollars of clips at, every time the market dips here. So eventually, once there's enough buying that's been acquired by these guys, the dips are going to get shallower and shallower, and that's why institutional investment smooths out returns on an asset, right? And then eventually it's going to be interesting to see with Bitcoin, because now I'm saying that, I'm thinking, yes, it smooths out investments, it smooths out volatility on an asset, but what happens with an asset that's got finality of scarcity, right? Because all they're doing is not selling. But that doesn't mean that other people are not going to buy it, right? And what happens when there's less and less Bitcoin available to buy? It's going to be intriguing to see, and I think that the charm that is always used, which is institutional ownership, smooths out the volatility of an asset. It's going to be quite interesting. What if we smooth out the downside volatility without necessarily smoothing out the upside volatility? And that's going to be quite a fascinating thing to see emerge. Now, the other thing that you got to realize is there is $6 trillion in money market funds sitting there going, I don't know what the fuck to do, right? Basically, that's a money market fund. Money market fund, I don't know what the fuck to do. And they're sitting there, and by the way, this is double the 30-year average, right? The 30-year average on the money market funds is roughly $3 trillion. This is $6 trillion sitting on the sidelines, not to mention the trillions of dollars just sitting in cash. I would say there's probably $8.5 to $10 trillion sitting in cash waiting for the uncertainty to dry out this year, which is, you got the US election, which is basically the best circus in town, the biggest, baddest circus in town. You've got We don't know what's going to happen with that. We got the crypto side of it because Donald Trump is now pro-Bitcoin. Kamala Harris is anti-Bitcoin. It's going to be seeing what happens with that. We've got the Israel-Palestine situation going on. We've got the Russia-Ukraine situation going on. China's economy, the arse is falling out from underneath it. There is a lot going on here. There's uncertainty that investors don't really know what to do with. You've got the Fed rate cuts happening. There's going to be the distance and the time gap between cutting rates and easing. There's all of these questions and things like that. But one of the things that you've got to realize, if you're smart, you're watching this channel, you're watching other channels, my main job is to sort of try and figure out if I can help people understand how smart money is going to be thinking before the actions are unveiled, right? Which is why, as soon as that ETF application went in by BlackRock, I was like, yeah, they're coming in heavy. They're coming for all the Bitcoin. They're going to try and control every single Bitcoin that they can get their hands on, and they'll create incentives for you to do so too. I predict that within 10 years, MicroStrategy will move their Bitcoin stack to an ETF, and it will probably be the BlackRock ETF, and that will happen after the in-kind transition happens, right? And I think that's gonna. I just think that's gonna happen, and we'll see how that plays out. But within 10 years, I think MicroStrategy, their Bitcoin, and it makes sense, right? You're a publicly listed company. You don't need to hide from the government. You can't hide from the government. You've got shareholders, et cetera, et cetera. You might as well put it in the ETF and get good financing on that Bitcoin. So as soon as an in-kind product comes out, I believe within 10 years, MicroStrategy is going to put their Bitcoin into an ETF and start utilizing it to acquire more Bitcoin on behalf of their shareholders. Now, this 8.5 to 10 trillion dollars that's sitting there on the sidelines, 6 trillion in money markets, and the rest sort of sitting there, basically all this cash going, I don't know what the fuck's going to happen, is going to be time right now is when that capital is going to be educated. There's going to be phone calls with that capital. There's going to be people talking to that capital saying, hey, we need to get you an allocation into Bitcoin. We need to get you an allocation into this new and emerging asset. BlackRock's behind it. Fidelity's behind it. Everyone's behind it, et cetera, et cetera. That capital is being spoken to and educated right now, just like you are trying to spend time learning about Bitcoin through this video. They're getting phone calls from people, and the difference is that the people they get phone calls from basically say, we're going to get you a 3% allocation. I can't say that to you, right? But that's what's happening right now. And when these taps turn on, you're going to see capital flow into Bitcoin a lot easier than it has in the past. And I predict that within a very, very short period of time, 10 to 15 years, you could have the Bitcoin ETF accounting for 10 to 20% of BlackRock's overall revenue. This is a very, very, very serious opportunity for them, right? And for every other ETF provider. So they're certainly taking this thing seriously. It's time for you to take this thing seriously. And we're hitting a point where it looks like, the stock market's getting ready to rip, Bitcoin's getting ready to rip, and real estate's getting ready to correct here. And as that happens, capital will pivot. It will move into Bitcoin because of the time that's been spent educating these people while they've been sitting on the sidelines in the I don't know what the fuck's going to happen category, which is the money markets and cash side of things, right? And when that starts happening, you're going to be blown away by how fast this moves, because we're already seeing it. The fact that the ETFs are buying just little amounts right now, like I said, Morgan Stanley is 0.01% of their overall AUM. That's what they put in, right? And we're still seeing a stable Bitcoin at $60,000. It's unbelievable, right? This type of market crash that we've just seen in the S&P and the NASDAQ in previous cycles, we should have seen a 35, 40, 50% drop in Bitcoin, if not more. And we haven't seen that. That's because the ETFs are buying that Bitcoin slowly but surely. And when these taps turn on, you're going to be left behind. So if you're sitting there going, hey, maybe I should get an allocation to Bitcoin, I've been saying this for a while, and we've been pricing out people with $10,000, pricing out people with $100,000, et cetera, et cetera. And soon we're going to start pricing out people with multiple hundreds of thousands of dollars. And so you got to either catch up or you're going to be left behind. So get to one Bitcoin ASAP. Let's not worry about trading it. Let's not worry about any of this. Get to one Bitcoin. It's the hardest, most scarcest asset humanity has ever created. And these guys are coming for it now, right? It's not even like, oh, they're going to come for it. They're here. They're buying. Morgan Stanley's $187 million in their filing. Goldman Sachs, $500 million in their filing. And this is fractions of their AUM. That AUM is going to grow. And as it grows, it's going to grow even more. Because as that capital goes from 500 million, let's say Bitcoin doubles, Goldman Sachs sees that their $500 million investment is now worth $1 billion. You don't think they're going to say, hey, maybe we should allocate a few more percentage points of cash to this asset that's growing like this? So get to your 1 Bitcoin, and ultimately remember, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.